Yeah. As I got another rhyme, another rhythm for y'all to listen. I'm never quitting on my mission. I'ma roll with what I'm giving. Got some ambition, this new edition, filling positions. Looking at the void in myself and feeling what's missing. Better watch the way you going, better go in the right direction. In the moment you stressing, but you gon' be counting blessings. And I know that for certain. Keep on working, open curtains, haters swerving, cause they ain't ready for your final version. Whoa. I'm never gonna give up, fall down, I just gotta get up.
You're listening to the Tom Ficklin Show on WNHH-LP 103.5 FM, your home for community radio.
Good morning, everyone. It's Friday, June 24th, 2022. I mentioned the date, and I don't normally mention the date on the shows because I really think that the information we provide is if not timeless, certainly has solvency and importance from an archival standpoint. In fact, you can go to New Haven and you can go to Facebook for the Tom Ficklin Show to binge on my shows that have been archived. Today we have Jeanette Lucky and Ted Brooks Jr. on the line, and visually and really throughout the world in terms of the function of the internet. And we're going to talk about lifestyle and fashions, but not what you think in terms of clothes or food, but what is your personal lifestyle and fashion when it comes to your financial well-being, not necessarily just for you, but for your family. Ted and Jeanette, just kind of bear with me for a second because we've just come through Juneteenth, and now this morning there's a Supreme Court decision that impacts people's lifestyle. And I mentioned that to say that there's some things we might not be able to control. There are some things we might have to kind of also try to just prevent and build up our insurance policies or our cloaks and our armor. And so this show is about how can you really from a current financial system standpoint build up your shield and your armor, not only just for you, but maybe for your current family members and maybe for future generations. So Ted and Jeanette, welcome to the Tom Ficklin Show. This is your first time, but literally this is not going to be your last time. I'm naming and claiming that right now. I'm putting that into the cosmos. Jeanette, go first. How did you get involved with the work that you're in? And I'm not going to interrogate you in terms of your credentials, but I am going to ask you to kind of share some of your credentials because you and Ted are qualified is an understatement in terms of this discussion for the next 45 minutes. So Jeanette Lucky, tell us about yourself.
So I have been in banking for the financial industry for the last 35 years. And I have been a loan officer, specifically a mortgage loan officer for the last 25 years. And honestly, Tom, I got here because I bought a home, didn't get the right service, even though the person that did my mortgage was perfectly lovely. And I thought that because they were supposed to be a friend, they looked like me, that they had my best interests at heart. And at the end of the day, at the end of the road, when we got to our closing, that is not what happened. And from that, when I came to it, it used to be Fleet Bank, I wanted to be that representation for us, that person that said, you know what, listen, this is about integrity and not about how much money I can make. So I always tell my clients, I didn't get into this business to make money. I made money because I got in this business, but I came here with the right heart, and it was more of a ministry for our people than it was, sustaining my life. I wanted people to be directed to what's right for them.
Excellent. And we're going to drill down a little further, Jeanette, in the course of our conversation about your journey and your experiences, because you referenced Fleet Bank, and I think it's even important, Ted, just before I come to you, for people to realize that, you may not hear the word Fleet Bank anymore or Bank of Boston. Right. And I used to work at something called Manufacturers Hanover. So the world changes, yes, and organization changes, and businesses change. But how can you, as an individual, become solvent or proactively plan your solvency and your prosperity given the chaos of the world at the moment. But Ted, tell us a little bit about why you decided to take time this morning and to share with me your background and experiences.
Well, the interesting part is, like Jeanette, I've been doing this for 30 years. And you don't find people today in jobs for that long. It's usually 5 years or less. I've been doing this for 30 years, licensed with both the state and the federal system through FINRA, having both a state license and a securities license. I got into this business primarily along the same course of action as Jeanette in terms of just thinking of it as ministry. My primary focus and my clientele is mostly involves people who look like myself. And I found it very important to have conversations that I have, particularly around life insurance. That's because so many of us in our communities don't carry it. And then we end up having to, when something happens, set up a GoFundMe, which drives me absolutely insane. Insurance is attainable one way or another, no matter what's going on, that you can get life insurance. And I've been a big believer in that. And so with that in mind, being in this business for the last 30 years, I too look at it particularly as ministry, helping people, particularly folks who don't understand the whole concept of it, because it can be a little bit, it has some mystique to it, but it can be broken down and it can be understood if you have someone who's willing to take time to do so. So,
Indeed.
That is my story.
Indeed. And in some ways, I could just be chatting with Jeanette solely for 55 minutes and with you also, Ted, for another show for 55 minutes. But I wanted to kind of merge the insurance and mortgage and just your skill sets, because both of you are committed servants to the community. So I hope that our listeners will not be confused, but we're going to talk about how what are some of the more important things that for Ted and Jeanette and about their clients, how to begin that process. And it really here's this term basic documentation. And it seems to me that the basic documentation is something that you should always have available for a variety of reasons, your credit and products that they offer. So stay tuned with us for the next 45 minutes, because it's really going to be exciting. Jeanette, weigh in, and then Ted as well, because you've talked about why you've chosen this field of endeavor. But Jeanette, what's the most, this sounds like a cliche question, but what is the most important thing to you? Most important thing that not only to you, but what you do, and oftentimes what you do and what you think are kind of related. And you're a public person and serving one another. So what's the most important thing that, from your standpoint, that you do?
Educate people. So mortgages are like the most mysterious thing in the world. I have worked with people who absolutely have no educational background, and I have worked with people who have PhDs. They're doctors, they're lawyers, they've gone to the highest level of education that they can get, and yet and still both they're on equal playing ground when it comes to getting a mortgage. It's so the way that I would put it to my clients, Tom, is, if I'm working with a cardiologist, I don't know how to operate on the heart. I don't know all of the parts of the heart or which valves that I would need to go in order to fix whatever. And likewise, I don't expect them to know all the moving parts in a mortgage. So the educational piece is the most important. And it's important that we avail ourselves to our clientele to help them to understand the process that they're going through. This process is like a spider web. It reaches out to actually fund most of the economy because there's so many different moving parts in acquiring a mortgage. It's not just me, the loan officer, but there are like 8 to 10 different positions that come into helping someone to acquire a mortgage.
And we're going to delve into that process shortly. Ted, for you, same question, kind of what keeps you focused, and what do you perceive to be the most important thing that you do?
I'm going to have to, and this is probably going to be a recurring theme between Jeanette and I'm going to piggyback on what she just said.
Got to educate them.
Education, because insurance tends to be perhaps not as overwhelming as a mortgage. but very close. The application process, actually just the education of why we need it. The biggest issue that I get, two things that I end up finding with people is, one, they don't have insurance, or two, they don't have enough. And people tend to think, well, of course, I've got a $50,000 or $100,000 policy. But is it enough? Because insurance does a lot of different things. It's not only just to, put you in the ground to take care of your final bills, but also replace your income for your family, to make dreams that you had become a reality in the event of your premature death. Yeah. So the education part of why we need insurance becomes very, very important. Excuse me, I apologize. My phone is going off, and I pray that it's not too loud, because I don't have a way to mute it. It is very, very important to have the ability to become educated from the perspective of just knowing how insurance works and what we need to do to obtain it. The interesting part is that insurance, while it is available for everybody, you still have to qualify for it. And that qualification process can be somewhat daunting, if not just disappointing when certain things don't align out. So education becomes the most important factor of what I do, just letting people know what it is, how it works, and how it can be obtained. And
Jeanette and Ted, just as both of you were talking, it occurred to me that both of you have conducted day-long seminars, workshops, retreats, and we're going to try to squeeze everything into 45 minutes. So we're not going to be able to get as detailed as we want. But again, you will be back. But I wondered, Jeanette and then Ted as well, because you both have mentioned the inaugural journey, putting your toe in the water, beginning the process. Tell us how do clients begin the process? Where should they begin? How do they begin? How do they get over that maybe reluctance of knowing that they're going to die, but not really facing the fact from a financial standpoint? But Jeanette, so where do clients begin in the process from your mortgage standpoint?
So that is actually the most popular question in mortgage lending. Where do I start? How do I get this process going? And I would tell them, start with your credit report. Credit is not the end all and the be all in a mortgage application. And this is what many consumers confuse themselves with is it's about my credit score. One of the issues is that when you look at television and media, all over the world, you hear, oh, it's your credit score. And if you have a great credit score, then you can get anything you want. Well, that's not true, Tom. You can have a great credit score and still not be able to afford to buy a home. So there's a combination of requirements that go into mortgage lending. But you start with your credit report. You want to make sure that you have your credit in line to purchase a mortgage, just to try to avoid the disappointment of being told no. Many people, and this is just me, I personally believe that everybody knows what's really on their credit. So they may not know whether they're qualified to purchase a home, but people know when they haven't paid their bills. They know when those bills have been sent to a collector, and they know when it's going to show up on their credit report. What happens is you get a whole lot of people calling a mortgage lender and saying, oh, well, just go ahead and pull my credit and let's see. Hopefully, the credit gods will make that disappear. Whatever derogatory credit I have, it's better for you to go back and deal with whatever credit issues you have before you attempt to start the process of mortgage lending, lest you put yourself in the position of someone judging you. And who likes to be judged? So there are different credit reporting agencies, all three credit reporting agencies, Experience, TransUnion, and Equifax. You can go to each of those credit repositories, and they are obligated to give you a free credit report once a year.
Excellent.
You can go to annualcreditreport.com, and you can pull all three credit reports. You just have to have a printer so you'll be able to print them off. But that will give you a basis for starting the journey of purchasing a home.
Good, good. And Ted's the same question.
The process that I end up dealing with the most is the underwriting process. Once we've obtained and ascertained what it is you need for insurance, what we then do after that is take an application. Now, what does it take to qualify for this? Credit score is a part of the life insurance application. A lot of people aren't aware of that. The lower your score, the higher your price is going to be for your insurance. You don't have to have perfect credit score, but you do have to have something decent. And the reason for that is the insurance company wants to make sure that you are going to pay this bill. Because as long as you pay it, they're obligated to pay it on the other end. But also part of that process is your health. It's always interesting to me as I talk to people initially. My first question is, are you healthy? Invariably, I get the answer, yeah, I'm in perfect health. And then I start asking questions. And the first question I ask is, what meds are you on? And then they do like this. Well, it's they bring out this long list. Well, then you're not very, very healthy. The insurance company's going to be looking at that. But that process entails going through your health, finding out what's going on, and then making an offer based on that. Sometimes we can actually come up with the number we've actually put on the paper, which is what we quoted you. Sometimes it's worse, sometimes it's better. But the process is that you are going to be able to, the intent is to obtain insurance to insure your life. So the process can be a bit detailing because, again, they're going through your history. But I will tell you, I had one instance with a client, actually a couple, but one stands out. He and I were sitting down talking, and we were going through the life insurance, and we put the application in. He got declined, but the underwriter said, have him go see his doctor right away. I'm not allowed to know what's on the report. They can't tell me what your health issues are. But she encouraged me to strenuously encourage him to go to a doctor. Turns out he ended up having cancer, did not know it, caught it early enough so that now he's cancer-free. So sometimes these things come about, whereas in fact, if going back in history, Magic Johnson found out he was HIV positive because of an insurance policy that was being taken out by the Los Angeles Lakers. That's how he found out. So sometimes these things come about with that in mind, but it is important that to recognize that there is a process, but the process is not it's not so daunting that it can't be overcome. It's just simply, we have to go back through your history, check you out physically, and make sure that you qualify for it.
I want to follow up on that in terms of the like either primary or basic documentation that needs to be provided. But before I ask that, Jeanette and Ted, talk to me a little bit, just as a brainstorming standpoint. You both are involved with, people hear about the economic crisis that's underway, whether we're going to have inflation or not, or everyone knows, of course, about gasoline prices and food being higher. So these are challenging times, to say the least. But in some ways, folks have been poor. I don't want to say the poor have been with us forever, but there are folks that are poor, and there are folks that, whether the Federal Reserve increases or does this basis point thing again, it doesn't affect them because they're still wallowing in daily meeting their needs. But talk a little bit, if you would, just for a few seconds, about this time in our lives from an economic standpoint, whether you're ready to buy a home, whether you can afford to pay for insurance right now. I'm just curious, but from a psychological standpoint, what's on your mind as you provide this quality of service delivery, given the context of this tumultuous world? Jeanette?
So from a lending standpoint, Tom, this is probably one of the best times for people to buy a home. And the reason is because rents are sky high. So as opposed to, even though interest rates have increased, which it was inevitable, the rates were so low for so long, inevitably we're going to have an increase. This is the world we live in. We're going into a recession right now. Inflation is off the Richter scale, but at the end of the day, so are rents. So when someone looks you in your face and tells you they want $2,000 for you to rent their property,
and small property,
right? They're $2,000 maybe for a 2 or 3 bedroom property, or not even a home. Not a home. I'm talking about an apartment, or maybe $1,800 for a 1-bedroom apartment. Rents are bananas right now. And if you can secure a property in this market, you still get the benefit of writing that interest off because the federal government hasn't changed that. And more times than not, you're going to pay a lower mortgage than you would for the rent. So you get to write off your property taxes, you get to write off the interest that you pay on your mortgage. This is the best time for people who are looking to buy a home to purchase. And I know we don't have a lot of inventory and we have a lot of buyers. But honestly, I still live in the standpoint of what's for you is for you. If you're not going to try, it's not going to happen. So from where I stand as a lender, yeah, I would say now is the best time for you to buy, because even with the interest rates in the high 5s, low 6s, you still are going to make out better. And the word refinance is a good word, because when rates drop, then you keep yourself in a position to refinance. And that is really an educational piece as well. You have to keep yourself in the position that when the market moves, you can move.
Yes. Good point. Ted?
I believe specifically because of my activities in terms of what I do for a living, I see the activities of the market from a different perspective.
Excellent.
And speaking from the perspective of the insurance aspect of it, I believe that no matter what the economy is doing, we still need to protect our families.
Yes.
No matter how the economy is moving, if something were to happen to a mom or a dad, and they're leaving children behind, there needs to be something in place that can protect them, at least financially. And one of the biggest misnomers that I have from people is that, well, I'm single, I have no kids, I have no home, what do I need insurance for? You still need insurance, and the best time to get it is when you're young. Now, some of my favorite clients, and I say this tongue in cheek, but some of my favorite clients are my older clients.
Yes, indeed.
I tell people,
sounds right to me. That sounds right to me.
Well, I tell people all the time, you have 2 things that work for you: time or money. If you have time, you don't need as much money. But if you have no time, you're going to need more money. But it's important, no matter what type of situation we're in economically, insurance will always play a role. And not just life insurance, because I'm a purveyor of more than just life insurance, but I also believe heavily in disability insurance, particularly for those of the white collar profession who needs to protect not only against death, but also against, if I'm unable to work, what do I do? How do I support my family? So these are the things that I believe are timeless, if you're not based on the economy at large, but just based on the necessity of, if something were to happen, what's in place to replace you.
Yes. So talk to me a little bit, guys, about the basic documentation. I mean, we might have covered that by innuendo, but I want to give you a chance to amplify that if you so choose.
So for us,
mine is shorter than
yeah, go ahead, Ted. I'll let you go.
Mine is okay. I can get the documentation that's needed for me is an application, and then what's called an attending physician statement, or APS, that we go to your doctor to get. After that, I'm done, and then we just make sure that the insurance company has all the information they need. But basically, all the information I'm going to need stems from the application itself, the question and answers, and also from whatever information we get from your doctor. So my documentation needs are very small. Jeanette's, however.
So my documentation needs include your federal tax returns, and it depends because if you're going through a program like CHAFA, which is a state program, then you are going to need 3 years of federal tax returns. And the reason for that is because even though clients come to you and they say they want a mortgage, they don't always want to be forthcoming with their documents. But the reason why we ask for that is not for the benefit of the lender, but for the benefit of the state to know that you haven't owned the property within the last 3 years. And your tax returns tell that story. You need 2 years W-2, so your most recent 2 years W-2s, 1 month's pay stubs, and your last 2 months bank statements.
And I appreciate your mentioning, even bringing up CHAFA. I was looking, Jeanette, it's likely that I'll do a show in a few weeks or months with, I guess CHAFA has launched a My Home initiative.
Yes, so CHAFA has actually launched a new program or a new down payment assistance that is forgivable over a 10-year period. So if you purchase if you fit into the criteria for that down payment assistance program, then it would be forgiven over a 10-year period. And it's a good time to own a home through CHAFA.
Indeed.
And they have in Connecticut, Tom, they have particular areas. So in higher income areas, you could get up to $50,000. And in lower income areas, you could get up to $25,000 towards your down payment and your closing costs. And it doesn't necessarily mean you will be granted all of those monies, but it means that they will give you enough money to make your down payment and pay your closing costs.
Excellent. I want to jump in for a little bit more for how credit and the implications of credit, but I want to jump first to kind of products that you guys offer. And again, this is not a show to promote both of you exclusively. This is an educational show, but I'm just so blessed to have both of you with your, I mean, if you add up the decades of collective experience, we're looking at 30, 60, almost 60 plus years of experience in this field. And I say that as really a shout out testimony to both of you and your friends and colleagues, because to stay in this field and to do the business that you're doing and to deal with, let's be frank, to deal with us, with our tribe for so long. I know Ted has less hair, probably had more hair when he first started. I won't talk about.
I did.
Jeanette's here, but Jeanette, delineate for me a little bit about products. Then I want to jump back to credit.
So we offer the standard Fannie Mae, Freddie Mac products, the FHA, which is government products, 203K, renovation loans, which everyone does not offer. And we also offer I-10 loans. So that's an individual tax ID number. So when you talk about someone being in the United States and being a citizen of the United States, people who usually have an I-10, they are not citizens of the United States. Okay, they're not permanent residents in the United States. They're what is classified as illegal aliens. But we have people, and I hate that term, so forgive me for using it, but that's the vernacular that's used in the world. But we have people that have been in this country for 15, 20, 30 years, not allowed to buy homes through mainstream banking because they don't offer those types of products, but we do offer those types of products. So, and there's always something for someone. So we offer VA loans for veterans. So pretty much this company covers the gamut because we also broker loans. So if we can't find it in-house, we'll go outside looking for it to see where we can find it at.
Tremendous. That's really helpful. And Ted, are you offering golf lessons or
no,
bowling
I am not
lessons,
offering golf lessons. I'm offering to take golf lessons to improve my golfing experience. The insurance world is a very vast world. Let me tell you what I don't do. which might be easier. Insurance has two different halves, that which is property and casualty, and then the more traditional life side. Property and casualty is things like car insurance, building insurance, umbrella insurance, all that stuff. I don't do any of that, though it is equally important. What I do is along the life side. So I'm dealing with life insurance, disability insurance on an individual basis and group, dealing with health insurance on individual and group, and things of that nature. So those are the three main areas that I encompass in. And again, that's part of my business. The other part of my business is dealing with securities, but that's a whole nother horse of different color.
Yeah.
And so I'm not mentioning that now for any specific things. But as far as insurance is concerned, life insurance, disability, and health, those are the three.
Excellent. So let's jump back to credit, because as we were chatting a little bit from the exchange of emails, it occurred to me that, and the word business continues to come up in the talking points that we discussed. And it seems to me that whether you're in an actual business or whether you are looking to buy a home or whether you're looking to take insurance out, that the business of your life, managing your own business, is just that's a challenge. And as you build on your individual lifestyle action business, that can morph into a more incorporated standpoint. So how does credit, Jeanette and Ted, affect your business? I'm going to move from this point after you guys answer, but I just want to kind of nail it down a little bit to kind of just convey that point that if you're a college student and you might have your first credit card, managing your personal business, managing your business that's fundamental 24/7, 365 from my standpoint.
So that point is extremely valid. I can remember when I graduated from high school, Tom, all that long time ago. But one thing that I specifically sticks out in my memory all the time is that I was 18 years old and I got a credit card offer in the mail the day that I turned 18 from a local lender. And they extended me a $5,000 credit line, which is another way of saying, you know what, listen, we're pigeonholing you, kid, because if you take this, you're probably going to run this card up and then struggle to pay it back. At 18 years old, when you don't really have any firm grasp of what to do with credit, how to approach that credit offer. So for students, I would say this, please talk to your parents if you get a credit card offer. And allow your parents to guide you in that. You have to have credit in order to exist in these United States. Honestly, in order to do business in these United States, you need credit. You can't even get a mortgage if you don't have credit. Lenders will just deny you based on the fact that you have no credit. So you would think the opposite would be true. Well, hey, you don't have any credit, so we'll be happy to give you a loan, but that's not the way it works. We want to see how you handled the credit that you have. And if you haven't any credit, then we haven't any reason to lend you money. That's the way that it's looked at in the financial industry. But having a credit card with a $300 credit limit is just as valuable as having a credit card with a $3,000 credit limit, you see? Because it's not about the size of the credit limit, it's about how you handle the credit that you have. Using wisdom would be, if you get a large credit card offer, to call that creditor and probably lower the credit limit so that you don't exhaust all of your resources on trying to pay back credit cards. So it's a way that you have to know how to use credit to your benefit, as opposed to just taking every offer that comes. Do not give people your social security number in the store for them to exchange it for a 20% or a 10% discount. These things happen all the time. And it's human nature for us to be curious or to feel like, oh, we're saving something. Oh, you can get 20% off today. But credit inquiries impact your credit score. So it's things like that where especially young people need to be mindful of when you walk into a store and they ask you if you apply for a card, if they offer you a discount for applying for a card, be more protective over your social security number. Be more protective over your credit. The typical rule is not to owe more than 30% of your credit limit on your credit cards.
Okay.
That's just like a typical rule of thumb, because you don't want to exhaust the limit. If you exhaust your credit limit, then it impacts your credit score, which then impacts your ability to buy.
So don't max out. Just before I come,
Exactly.
you said don't max out, and people think, I have $5,000, I'm going to max it out, and you say that that's not the right thing to do.
Exactly.
So important. Ted, any thoughts in that regard?
For insurance, credit plays a part, but not as a significant a part in the process. Credit plays a part in the insurance company, as I mentioned before, wants to know that you are able to handle whatever it is, the premium that you've chosen, that they've approved you for. And they do so looking to see if you are going to be responsible. Now, with that in mind, the lower your credit score, the more impact it has on the amount of premium you're going to end up paying. Because there are 4 different levels. There's super preferred, standard, and then less than standard. Now, in my vernacular, I like to explain it this way. It's very good, there's average, there's then below average, or what I like to call is we've got a problem. We got a problem goes into 4 different levels. We got a serious problem, we got a really serious problem, we got a really serious problem, I can't help you. It goes into those 4 levels. But credit will bring down your level, what you qualify for, based on what that number is. So, for example, if you've got an 800 score, insurance company is going to look at you more favorably. You got a 500 score, they're going to look at you less favorably, and your premium will match that number. What I mean by that, the premium is going to be increased because of your credit score. Now, credit score the end all be all like it is for mortgage? No, it is not. But it does play a portion. And I find it, people aren't always aware of that.
Indeed.
So as they go to apply, not thinking about, what's my health got to do with my credit score? Well, yes, the insurance company wants to make sure you're healthy, but they also want to make sure you can pay for it. So just like anything in life, the worse your credit score, the higher it is you're going to pay. Jeanette can attest to the fact that your credit score is 500, you're going to pay more in a mortgage than someone who's 800.
Well, if you have a credit score of 500, Tom, no one's lending you anything in the mortgage industry.
But you get my point.
A lower credit score is going to get you a worse credit offer, a worse rate offer. So you're going to get offered a higher interest rate for lower credit scores. And in a marginal credit score in mortgage lending is like 620. But you will get offered at the top tier of interest rates. They're going to offer you much higher as opposed to having a 680. And for us, in mortgage lending, there's kind of like a cutoff because, we have people calling all the time. Oh, my credit score is 800. Okay, well, listen, after 740, we're not offering you anything. It's like 740 is really the top tier of mortgage lending. It's nice if you have a 800 credit score. It means that you never paid anything late in your life. Good for you. But we're not going to offer you a lower interest rate. No lender is doing that based on, this 800 credit score. Once you hit that 740, you're at the top tier. And that's great. But I'm concerned more with people that look like us, lower credit scores, but still being willing to accept anything. Because it's just as easy to get your credit cleaned up. And prepare yourself and go back to a lender and say, listen, this is where I'm at. And I know that I have a good credit score. I know I meet your lending criteria. Instead of rolling the dice and waiting for a lender to tell you this is what you have to have. Because there's certain products that you cannot access with lower credit scores. And those are usually the ones with better interest rates.
Jeanette, you mentioned word products and Ted as well. Let's talk a little bit about products. And by the way, we have maybe 12, 13 minutes. So if something kind of crosses your mind or just you have an inspiration, kind of jump in terms of closing thoughts. But in terms of products and who decides the products for your clients and in terms of your experience, how do you recommend or suggest? I mean, that seems to me that's a delicate dance and really a diagnostic dance, which again, given your decades of experience, can really assist in making those suggestions. But how do you decide what products are best for your clients, Jeanette?
So what I decide is these are the offers that you fit into. So whether you can get an FHA loan, whether you can get a conventional loan, which is Fannie Mae, Freddie Mac, because you may fit into all of those boxes and be able to get all of those products. But what you want to look at is what is the most affordable for you. FHA loans carry what they call an upfront mortgage insurance premium that is 1.75% of the mortgage that you're going to get. And so that is a fee that is added to your closing costs. It's actually factored into your loan. And then they have a higher mortgage insurance premium that you have to pay, which is mortgage insurance for the life of the loan. So it doesn't drop off. Conventional products have a mortgage insurance premium. They have no upfront mortgage insurance premium, just a monthly mortgage insurance premium that you pay. And when you get to 80% loan to value, that will drop off. So it depends on what is better for the client. So what we do is we present you with this program, this product, that product, and then allow you to choose what's the better road for you. This is your interest rate offer on an FHA. This is your interest rate offer on a conventional loan. Typically, conventional loans are going to carry a better interest rate depending on your credit than FHA. So it is a diagnostic dance that you have to do with your clients to say what's more affordable to them, because sometimes an FHA loan may have a more affordable payment than a conventional loan. And if that is so, the client is going to go with the more affordable payment. So it's a matter of logic, but it's just our job to present all of the scenarios to our clients and say, what do you feel more comfortable with? Whether it's a 10-year loan, Tom, or a 15-year loan, or a 30-year loan, all of that comes into play.
And Ted, just before you respond, it just seems to me that when Jeanette mentioned the word education just kept on coming back as she was speaking, that even once you engage people such as yourself, the consumer has to be willing to be educated him or herself and not be stubborn or frustrated, because it's a mutual process. And for you to do your job successfully for the client's best interest, the client also has to kind of spend some time understanding, reading, researching, thinking, and asking you questions. So it's really the counseling aspect, and both of you have mentioned the word ministering in terms of just providing a heartfelt assistance is just so key. But Ted, any comments in that regard?
Yeah, I because the choices with particularly life insurance is so vast, in the effort of talking with the client and counseling with them, that then determines what products I'm going to suggest. But with that comes something that we haven't talked about, so I hope I have time to mention it.
Please, Bill.
The difference between being captive and being a broker.
Okay, let's go to it.
I have the ability to find out what's best for you, not what's best from what I want to sell, but based on our conversation, what things are best for you. So I like to give this analogy. You can have someone show you a loaf of bread and say, this is the best bread ever made. And I'm going to sell you this bread, this white bread. Whereas I'm coming in with a bakery store, say, listen, I've got all kinds of different breads. Which one do you think best fits you? Let's talk about it. So I'm not coming with a particular thought, but I'm coming with an open mind, hearing your story, and then taking your story and then coming back with a recommendation that I think fits your story the best. Some products are better than other products. Some companies are better than other companies. Some companies do things different than other companies.
Mm-hmm.
So basically, based on what it is, we're having a conversation about what your needs are. That's going to determine what products I'm going to present, as well as what companies I'm going to present. Do I have my favorites? Yes. I've been in this business for 30 years. So yes, I have my favorites. But I'm also very acutely aware of whatever I don't have, I can go get, because your need dictates that I do so.
And just before we go to the process flow, and again, we have 12 or so minutes, so it's something might come to your mind that we haven't discussed, or might want to introduce a new topic. But this is the freelance time to do it. But I'm a mother that's at Yale Haven Hospital at 11:47, and just has given birth. Jeanette, what would you say to her in light of our conversation? A single mother.
I would say that in order for her to teach her child, like, she has to walk the road that she wants her child to walk behind her.
Mm-hmm.
So that means that you have to set yourself up for that. One of the things that is really, really necessary in this business, Tom, is transparency.
Mm-hmm.
So my advice to a mother that just had a newborn child is teach your child well and be transparent, because we've all made mistakes. But if you talk them through the mistakes that you made, they may not have to walk that road. And they need to learn about savings, about life insurance. What we do is, in our communities, we'll buy a Maserati and park it outside of the projects.
Mm-hmm.
Because it looks good. And we have really fallen prey, Prey, to what we see in social media.
Mm-hmm.
So if I take a picture outside of a house with a realtor and say, oh, she did the best job in the world for me, everyone in the world will think that I purchased that home. But have I really? Or is it the illusion of the internet? Because realtors not only sell homes, they rent homes.
Mm-hmm.
Okay, but it gives off that illusion. And so what I would tell a young mother is, listen, don't allow your child too much access to social media. Teach them the difference between reality and illusion, and also not to follow every whim.
Mm-hmm.
But educate that child in such a way, don't insulate them from the world, but educate them in such a way that they will be able to navigate in the world. They have to have some type of financial literacy in their life. Yeah. In this day and age, it is imperative that we teach our children financial literacy, which means how much of that quarter that you got for allowance do you spend?
Mm-hmm.
Do you spend the whole quarter? Do you share some of that with someone who may not have as much as you do? Do you save some of that? How much of that do you save? And it has to start from the cradle. Mm-hmm. Because we are behind the 8 ball right now.
Mm-hmm. And Ted, I'm going to revise the scenario a little bit, and I don't think you'll mind my mentioning the people that you're active in your church family. Let's pretend you're at your church and you're at a young adult meeting on a Wednesday night with black guys. What do you say to them in terms?
I'm sorry. Repeat that one more time.
You're at your church on a Wednesday night with maybe a young adult meeting, and they're just young black men, maybe 10 black men in front of you. Well, what do you want to say to them and share with them about their future aspirations?
I would talk to them about my own story. Growing up, the information that I share with people, I was not privy to, particularly at their age. Mm-hmm. And most poignantly, my mom and dad taught me what they knew. My brothers and I started working at 8 years old. Back in the days when, and we don't have this anymore, back in the days we had paper routes.
Mm-hmm.
And I would deliver newspapers. And my brothers and I ended up in a 6-block radius being the only newspaper boys in the area. And we started this at a very young age. Mom taught us how to, collect money and make sure our bills were paid and make sure we saved money. She gave us the basics. Some of the more sophisticated things weren't available to be given. They are today. Just to take a look at some of the different instruments that are available. If someone wanted to get started in investing, they could make a few strokes in their phone and they can get started in investing. For insurance, I would just simply talk to these young men about the fact that one, please make sure you're not living a lifestyle where insurance is going to be utilized prematurely. Two, to make sure that you get started on a path, as Jeanette mentioned earlier, and again, I do appreciate her for saying this, financial literacy, knowing what money is, knowing how money works, and then lastly, knowing how money can work for you. And insurance is just one of the many vehicles that are there, but my conversation would center on for them, and just in terms of just having the awareness to understand their place in life, particularly as young Black men, and how they don't have to utilize street environment in order to make their monies, but they can take their street smarts and translate it into something legitimate. A lot of these young men are very, very, very talented men. They just don't have an opportunity. But I would speak to them about making your own opportunity if need be. How do you get ahead legitimately so that you become a productive member of society, our communities? It is imperative. And I applaud the young men who are doing well. I applaud you, those who graduate from high school and on your way to college. I applaud you. But I also am worried about the young men who didn't make that choice. I worry about the young men who don't have an opportunity to actually have somebody look out for them. So yeah, that would be my conversation.
Tremendous. We have about two more minutes. So I want to give everybody kind of last word. And again, as I mentioned at the top of the show, this is your baptism. This is your inauguration. This is not a one-off. So clear your calendars for the future. Talk to your peeps, whoever you have to get permission to kind of come back on and share this information. So it's so critical. Jeanette, what we do is we push the envelope, and Harry is our station manager. So when he plays the music, that means he's going to the next show. So we have about one minute for each of you in terms of closing remarks. Jeanette, I'll let you go first.
So Tom, I'd like to thank you for having us today. I would say that anyone that is considering moving into a home of their own, because homeownership is the great American dream. And we haven't been invited to the table. We have to bring our seat to the table. No one invited us, but we'll bring our own chairs. We do that. And that means that there's some education that needs to go on. I am available to speak to anyone that needs help. Anyone that
by the way, Jeanette, what's the best way for people to reach you?
They can contact me at 203-410-6752 or email me directly at jlucky@loandepot.com. So a very simple email. But I would absolutely offer them my time and my experience in how to become a homeowner.
Tremendous. And Ted?
Well, again, like Jeanette, I would also love to have any conversation with someone concerning life insurance. I sincerely believe, one, that we all need it. I really believe that. And two, that we can all get it. No matter what the circumstance is, I can find a company to fit your need, whatever your circumstance is. And I invite any and all to be contacting. My office number is 475-238-7088, or you can reach me through email, tbrooksjr@innovativeplanning.net. That's tbrooksjr, JR, @innovativeplanning.net. So, Tom, thank you for having us. We really do appreciate it.
This is just an audition. You guys have passed the audition, and we're going to do it again.
You gotta listen. I'm never quitting on my mission. I'm gonna roll with what I'm giving. Got some ambition. This new edition, filling positions, looking at the void in myself and feeling what's missing. Better watch the way you going. Better go in the right direction. In the moment you stressing, but you gonna be counting blessings. And I know that for certain. Keep on working, open curtains. Haters swerving, cause they ain't ready for your final version. I'm never gonna give give up, fall down, I just gotta get up, yeah. Cause this is my road.